The fintech space is a tricky one to traverse. SoFi Technologies shares have outperformed the broader market this year. The company is nearing profitability with expectations of achieving net profits in fourth quarter 2023 as it scales up. Boosting loan activity is a clear strategy for SoFi, driven by the potential for increased interest income. Let's dive in. Here's why you shouldn't be discouraged by SoFi Technologies' stock's recent retreat. Welcome to Timely Investment Research. After a challenging 2022 due to surging interest rates, the stock market has found solace in 2023. Investors are rejoicing as the Nasdaq Composite Index has surged by 31%, which bodes well for the fintech sector. Notably, SoFi Technologies' stock has outshone this performance, skyrocketing 88% this year, despite a 16% dip since August's onset. SoFi Technologies' stock initially surged post-earnings, then retreated to single digits, continuing its downward trend. Despite recent frustrations, this price reversal doesn't necessarily indicate a negative shift in the overall narrative. While short-term performance remains uncertain, the enduring growth potential of this financial disruptor supports the likelihood of future price increases. Let's dig deeper and discuss why SoFi Technologies' stock could be a good one to consider at these levels. Good news in the fintech sector. After SoFi Technologies released second quarter earnings on July 31st, its stock surged 20%, but later gave up most of those gains. The company achieved a second quarter record revenue of $498 million, up 37% year over year. It had a remarkable 248% year-over-year increase in adjusted earnings before interest, taxes, depreciation, and amortization to $77 million. SoFi's shares surged after strong second quarter results with a net loss of $47.5 million that halved compared to last year. Improved guidance and the potential for fourth quarter generally accepted accounting principles profitability excited investors amid the company's history of losses. SoFi's CEO Anthony Noto highlighted the company's record adjusted earnings before interest, taxes, depreciation, and amortization of $77 million and strong margins. The addition of over 584,000 new members brought the total to 6.2 million, a 44% year-over-year increase. However, the decline in stock price raises questions about its valuation as a neobank versus a traditional bank. High potential ahead. The rejection of the plan to forgive student loans and the resumption of payments in October led to a 37% surge in SoFi's shares. The company's foundation revolves around affordable education, with student loan refinancing being a core product. As payments resume, consumers might turn to SoFi for relief, especially as they face financial challenges. SoFi is advancing towards profitability with significant growth in adjusted earnings before interest, taxes, depreciation, and amortization, increasing 278% to $77 million. In the financial services sector, contribution loss reduced to $4.3 million from $54 million, showing positive variable profits. Management attributes this improvement to better product monetization and operating leverage from rapid scaling. This indicates potential net profits in the near future. What now? SoFi is riding high on 2023's positive momentum, evident in its stock performance. Yet, potential investors must weigh their choices carefully. While student loan refinance boosts the digital bank, loan repayment issues could pose financial risks. The company's current price-to-sales ratio is 4.3 times, significantly higher than earlier this year, making valuation a crucial factor in your evaluation. Management affirms progress towards achieving net profitability by fourth quarter 2023. Despite an initial surge, SoFi stock has since dropped over 8%, potentially because of concerns about overvaluation. Presently, SoFi shares trade below 5 times trailing 12-month sales, a reasonable figure considering its growth trajectory and imminent profitability. This suggests substantial growth potential ahead for SoFi's stock. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.